Do you want to know what banks are looking for when you apply for a mortgage? Stick around and I'll tell you all about it. So there's 6 critical things that banks are looking for whenever you apply for a mortgage. And I'm going to do a mini series on all these 6 things, but it is a lot of information, so I'm going to cut it down into segments. But let me tell you what those 6 things are. The first thing is they're looking at your income. How much income do you make and how steady is that income? The second thing that they're looking for is employment. How long have you been at your current job or in the industry that you're in? That shows stability and ability to pay back a mortgage. The next thing they look at is your assets. How many assets or how much assets do you own in order to secure this loan? The fourth thing that they look for is down payment. Do you have the ability and the reserves, the money to make a down payment and cover closing costs? The fifth thing that they look at is your credit score. And when we talk about credit score, there's different types of credit score. If you've seen some of my previous shows, we have told you that there's retail credit scores and then there's mortgage credit scores. So we're going to take a look at the mortgage credit scores and how they work around that. And then the last thing, and this is probably the most elusive of the 6 things that people are like wondering, how does it work? And that's why it's going to be the first topic that I cover. But the last, or the 6th one, is debt to income ratio. So those are the 6 things that banks are looking for. Now let's dive deep into the first one, which is debt to income ratio. Debt to income ratio is all based on a monthly cycle. So in order to start, you need to figure out how much you make per month. A lot of us know how much we make yearly, and a lot of us know how much we make per paycheck, but it's critical that you figure out how much you make per month because the whole formula is based on that. For simplicity's sake, I took a round number like 10,000 in determining that that's how much money you make. But whenever you're doing yours and you're working out your figures, make sure that you use the exact amount. So if you have $10,000 in income and you can carry 45% in debt, that means that you can carry $4,500 in debt. Now, what is debt? That's a great question. Debt are things that you pay monthly. For instance, your car payment, student loans, any credit cards that you may have. And when you figure in the credit cards, you figure out the minimum payment required and other things that are revolving, maybe a department store credit card or something like that. Things that you do not count towards your debt is your cell phone, utilities, and other miscellaneous things that are not totally committed on a monthly basis. So $4,500 in debt. It's important to know that you do have debt and you have to figure out how much it is. So for this example, I'm going to assume that I have a $200 a month debt in student loans, right? So I'm going to write this, student loans. And then I'm going to put down $150 in credit cards. So that's 200 in student loans and 150 in credit card. What other debt do I have? Oh, that's right, I pay child support. So I pay $700 a month in child support. So now we add these numbers to figure out how much debt we actually have. Again, this is not including housing or utilities or anything like that. We'll get to that part in a minute. But in this figure here, it is $1,050 that I have in debt. So if I subtract $1,050 from $4,500, I will get $3,450. That's how much house I can afford. Now you and I both know that's a good chunk of change, and that's a pretty hefty mortgage that you're going to be carrying if you spend $3,450. Now, do you have to spend this much? No, that's just within the allowable amount of 45% debt to income ratio. So just because you can afford a house of $3,450 doesn't mean that you should buy one. That's a personal determination that you and your spouse, or if you're single, that you will have to make. But now you know how much debt you can apply towards a home, and this is what banks are looking for. I know this is pretty simple. Our life's a little bit more complex than this. So if you need help figuring out your debt to income ratio and to figure out how much buying power you have, please give me a call. My number is 210-870-0296. I'd be glad to help you. And if you want to go a little bit more in depth, I work with some of the best lenders in San Antonio. So don't be afraid, we got your back. Hopefully this has made sense to you, and maybe it's a little bit more clear now as to what banks are looking for in reference to debt to income ratio. Stay tuned for the other 5 things that banks are looking at whenever determining your mortgage, determining whether or not to give you a mortgage. So there'll be more shows on that. Stay tuned, and I'll talk to you soon.